Hey everyone, and welcome back to another fundamental video about investing on the stock market. And today I thought I would give you my take on dealing with losses. I've received a lot of questions about it, so I'll cover it in this video. Now, losses is unfortunately a natural part of investing, no matter what you're investing in. And if you're trying to make it, you're going to fail, and no matter how great of an investor you are, you will lose money, you will lose some of your gains, and it's important not to lose your head when it does happen. Now, first of all, a loss in the stock market is not like a loss anywhere else, right? If you lose money on an investment or a stock goes down a little bit, it doesn't really matter. It has already happened, it's in the past, it doesn't matter. And this is a very important thing in investing, and it is a concept in finance. Once something has occurred, it doesn't matter. All you do is look at the situation and see, what should I do? You should not let what's happened affect you. So when a stock goes down, it's usually a good opportunity to buy even more. So if you're holding a stock and it goes down 20%, that's a great opportunity to buy at a discounted price. You're getting it 20% off, sort of like a sale. And whenever the stock market takes a dip, or there's a crash, recession, sell-off, correction, call it whatever you want, it usually bounces back up again. Just look at the charts of the S&P 500 and the Dow Jones. During the Great Depression, the dot-com bubble, or the financial crisis, the stock market bounced back really hard and really quickly. So usually you should buy when there's blood on the streets and when everyone else are running around. You don't have to, but it is a good opportunity. And if you experience some of your stocks going down, a good idea could be doing something we call dollar cost averaging, DCA for short, which means you initially buy into an investment and you believe in the company, you've done your homework, it's a great business, but then the stock maybe goes down 10%. Let's say there's a bad earnings report or some sort of bad news, a CEO leaves, some bad sale numbers. You can buy some more stock. Then it goes up again, and then it falls again, and you buy even more. This way you lower the average dollar cost per share. And over the years, this is usually the best strategy. Statistically, mathematically, this is the way to go. And if you believe in a business, you should buy when it goes down. But one very important thing to remember, and I want you guys' opinion on this, you guys and girls, is that, I have a lot of stocks in my portfolio, and whenever one of them goes down a lot, I buy more. But I will also say this, if one of your stock goes down 20, 30, 40%, and you don't want to buy more, even though you could, you should maybe ask yourself, is it worth holding the stock at all? Because if you're not worth buying after a crash, why did you buy in the first place? So it's a good test to see how you actually feel about a company. And if you're buying some other stock instead of the one that crashed, you might want to sell it altogether because you clearly don't believe in it anymore. Or the bad news can actually be really bad and the company's struggling fundamentally, something is changing, they're not keeping up, they're not innovating, everything is going down the drain. That could actually be a reason to sell it altogether. So sometimes a big loss is because the company's just not a good company anymore and everyone is selling. You might want to sell as well. Now, another point I want to touch on is whenever a stock goes down, we tend to be sort of blinded by the chance of buying at a discount. We usually say buy the dip, and some people will religiously buy beaten down stocks, and they will pretty much only buy after a sell-off or a stock has crashed. Now, I think this can lead you down a bad path, right? You shouldn't only buy after a loss or only buy stocks that have gone down. You should make the best investments you can. And sometimes a stock can fall due to some really bad news, fundamental changes, the company's really struggling. So maybe you shouldn't buy more. You know, you shouldn't sell everything, but maybe you should just keep it the way it is. You don't have to buy the dip. You shouldn't sell some other stocks just to buy the dip in another stock, for example. And now, as you might have realized, I think that losses can be a good thing sometimes. You've lost some money, you've lost some gains, but it doesn't really matter. It's happened, it's in the past, forget about it. And if you've taken a big loss on a stock, you can consider realizing your loss for tax purposes. For example, you can use it to offset your gains. So if you have made money on some trades and you have profit of $10,000, you have to pay taxes on those $10,000. Let's say 25%. That's a lot of money. But maybe you have a stock you've lost a bunch of money on. Maybe you've lost $10,000, and if you sell both of those, you end up at zero. So you're realizing profits without paying tax because you're offsetting it with your losses. This is also something you can do. There are other tax purposes, but I'm not going to get into those in this video. So I guess what I'm trying to say is it's never good when a stock goes down if you're holding it. Don't fool yourself, but it's a great opportunity to buy more. Don't be scared, don't sell, don't start doubting your investments just because of price fluctuations. The fundamental thing is the most important thing, and if you believe in a company and they have a bad earnings report, buy more. So be fearful when others are greedy and greedy when others are fearful. Losses happen, but it's not like a loss in real life because you don't have to deal with it. You don't have to cry, you don't have to beat yourself down. It's happened and you can profit from it usually. So don't worry, buy more. That's about what I have to say about taking losses. I've recently gone through some losses myself in my portfolio. In 2018, I had 2 stocks that crashed 50%. I bought some more, but not too much, because I recognized that the losses were for a reason. When a stock goes down 50%, there's some big issues, but the stock market was also selling off, so it sort of put fuel on the fire. So I just bought a little bit more, and every time I've bought the dip, it's worked out great. I bought a little bit after every sell-off. When I initially started investing in Amazon back in 2014, I invested a small initial amount. Then like a month later, they had a bad earnings reports. Stock went down 10%. This is true. I bought some more. I think I doubled my position. The next earnings report, same thing happened again, down 10%. I bought more, and then it happened one more time. Another bad earnings report, down another 10%, and I bought some more. I bought a little bit since then. So it really works out. And if the company is great, a bad earnings report is like a gift. It's like an instant sale, and it rebounds very quickly as long as the business is good. So that's it. Let me know what you guys want me to cover in my next video. Let me know how you're holding up, what stocks you're holding, or if there's any stocks you want me to take a look at. Subscribe, leave a comment. I answer all questions. See you guys in my next video.